Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. I just wanted to go over a quick recap of the earnings call. We can go into various elements deeper over time. I won't just repeat everything that was said, but will focus on the parts I feel are most important. We're told that there is a one-time benefit of $288 million from credit revenue, which I didn't realise or anyone else seemed to account for, which did throw off all the financial estimates. We're told OPEX as a percent of revenue continues to reduce due to higher revenue, with a 19% operating margin. This is mainly from more economies of scale kicking in. Remember, we're not yet feeling all the economies of scale. I think economies of scale will not start diminishing until we hit around 3 million units a year. We're being prepared for Shanghai losing about a month of production, which will impact Q2. We knew Q2 isn't going to be great, especially with the new factories ramping. However, we are told that some of this can be offset by the higher price increases. Elon says that within time, they will move to the front and rear castings for all the 3s and Model Ys, but not the S and X, implying that there's going to be a 4680 structural pack for the Model 3, probably a new fab in Berlin, I would think, for that, and probably Austin too. Elon tells us that we should see 50% growth this year, and a good shot of even hitting 60%. 60% would come to pretty much exactly 1.5 million vehicles delivered. Elon talks about the ramping of the new factories and how the initial ramp will look small but grows exponentially. But he says, quote, "We expect to ramp them initially slowly, with them achieving high volume by the end of this year." Wow, high volume, as in volume production, that would be amazing. In other words, don't look at the stock price until the end of the year. There could be lots of issues from now until the end of the year. But if they hit volume production in both factories, then it will all be worth it. More is talked about the dedicated robotaxi, no pedals or steering wheel, but Elon says he aims to reach volume production for it by 2024. He also goes on to say there'll be a reveal sometime next year when all the details are provided, such as, will anyone be able to own these? The trillion-dollar question. But volume production for these robotaxis by 2024 must mean that production may start early 2024. So I'd expect a new fab to start being built towards the end of this year at the latest, dedicated to the robotaxi manufacturing. I think this will also be too early for any other new battery chemistry or form factor, implying the robotaxis may also use 4680 cells. No, I highly doubt they'll be using CATL's LFP in their robotaxis, as they won't be able to scale enough and they'll cost too much. But Elon says it will be optimized for the lowest cost per mile. So I don't know, perhaps there is a chance Tesla are closer with their in-house LFP. And Elon says, we remain on track to reach volume production of the Cybertruck next year. Now, I'm pretty sure Elon has only said we aim to start producing the Cybertruck next year, but he's talking about hitting volume production next year. So production might start early next year. Well, that's unbelievable too. I just did a valuation model for all these factories at capacity. I didn't expect Cybertruck to reach capacity in what sounds like around mid-2024 perhaps. By the way, my price target for that was $3,000. So perhaps we could see that price tag in 2024. This also implies that 4680 production would be making good progress too. Elon says we aspire to hit 20 million units a year still and are 5% the way there. Elon remains confident exceeding 50% annual growth for several years. Several is presumably around 5 possibly. If Tesla achieve 1.5 million this year, then at 50% for the next 5 years, we're at around 11 million units a year in 2027. However, Elon has also said he thinks they can possibly achieve more than 70% in the past too. Elon talks about Optimus more and how big a deal it is and how it will be a bigger industry than cars, FSD and robotaxis. I'll get more into the economics of robots sometime. It is interesting. Then Elon says he is very excited and optimistic about Tesla's future. Giga Shanghai is going to come back with a vengeance. Elon saying Q2 vehicle production should be about as high as Q1. This was in context to Giga Shanghai, but he may be talking about total production for the quarter. But Q3 and Q4, he says, will be substantially higher. Presumably he's referring to the ramping of the new factories. Elon then confirms that Tesla should be able to produce over 1.5 million cars this year, which is up 60% from the previous. Ramping up a factory to volume production is about 9 to 12 months from start of production. But they're getting better at this ramp. But the 5,000 a week level, aka volume production, is usually around 12 months from the start of production. Now, Tesla have been testing these lines for a while before the factories were officially opened. Elon said they're getting better at ramping with the practice they've had, and he also says that these new processes will make the ramp faster. Therefore, I think around Q3 we should be seeing them close to volume production, which would be amazing. But until then, this year is likely to be up and down. It's all about the run rate Tesla achieve by the end of the year. Elon answers a question later on and reiterates that he thinks Austin and Berlin should be a faster ramp because they've learned more. 30% less robots and front and rear die casting. Body line for the structural pack, body shop size drops 60%, almost implying it's the vehicle manufacturing as the bottleneck rather than the batteries. A lot of other questions about raw materials, price increases and inflation. It sounds like everyone else is working out the next limiting factor. Before it was batteries, due to there not being enough battery factories. Now Tesla and everyone else have decided to build lots of battery factories, but now they need the raw materials. And it sounds like lithium is going to be one of the major limiting elements. The fact Elon is talking about lithium so much might imply that if Tesla are doing iron-based cathodes, they'll be using lithium, not sodium. Tesla have also purchased a large amount of land in Nevada that supposedly has enough lithium to reach terawatt-hours levels of production. Tesla is asked about how the cost of the 4680s are going and the potential range increase. We're then told it will be a 5-year cost trajectory to reach all the battery day goals. I believe on battery day we were told it was just going to take 3 years to reach. And sadly, no one answered the question regarding range increases. Elon says that the 4680 pack will be competitive with the best alternatives and think it will exceed them next year, implying that the cost is already around 2170 and will be lower cost next year by improving rates and yields. But the capex was 5 times less than the equivalent cell factory. In other words, there's a reason Ford, GM and everyone else are spending tens of billions of dollars on their factories, because they're spending 5 times more in capex for the same gigawatt hour output. Then what run rates do we expect for 4680? Elon confirms what we recently heard, that Berlin will transition to 4680 cells later this year. In my opinion, that's a really good sign on 4680 progress. Although Elon also says that Austin has a 2170 non-structural pack as backup. Oh no, was this the EPA car after all? Just kidding, slightly. Then I think we hear one of the most important statements on the call from Elon, saying, if things go according to plan, we'll be in volume production with 4680 sometime perhaps in the 3rd quarter, and certainly in the 4th quarter. I believe Elon is referring to enough 4680 cells being produced in Texas for volume production of the Model Y at potentially around 20,000 units a month. Wow, seriously, this is a big deal. Because if you do the numbers, it's not hard to place a stock price valuation of around $2,000 when these new factories are at volume production, which sounds like it might be this year. However, we're also told that with the China shutdowns we had, that Tesla now have sizable cell inventory, excess cells to support the 2022 volume targets, which gives them the flexibility to upgrade the 4680 line and maximize learning step by step and modify the structural pack design. Okay, but I thought chips were the supply constraint, but apparently it might be cells. The 4680 output is not going to affect this 1.5 million units for the year. It sounds like Tesla are going to be refining the 4680 lines and packs more so, rather than hitting mass production, despite them also saying volume production later in the year. Perhaps they're talking more about Q2 and Q3. Output will become a risk next year if they do not solve volume production on the 4680 lines. The future growth is pretty much dependent on the 4680 lines, like I've been saying for a really long time. But Elon is highly confident they will sort out volume production before early 2023, likely at a similar time when the vehicle lines are really ramping up and need a lot of batteries. And Tesla may have $500 billion cash by the end of the decade. It is mentioned that perhaps this might be used for installing capacity for robotaxi adoption, possibly Tesla owning their own robotaxis. And Giga Nevada is expected to expand still, but nothing like compared to Texas. Perhaps increased 2170 production for longer range and performance versions. But we'd heard similar things said before, or not worth going into too much detail. All in all, I think this sounds good. It sounds like Elon is feeling confident with 4680 production. Even if it takes them until early next year to hit the desired levels, then the stock price will do well. It seems that Tesla are addressing the raw material issues and that they will be the next limiting factor after battery factories. And Tesla is going to do whatever they can to encourage the industry. Unfortunately, no more data on the 4680 specifications and no mention about Master Plan Part 3. Look forward to hearing all your thoughts on it too. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.